Hi, and welcome to Insight Private Wealth's quarterly investment market wrap. I'm Sam Stillone, and I'm here once again with Dr. Steve Garth for an inside look into the conversations we've been having at the investment committee following the September quarter market wrap. Steve, we're still in lockdown, obviously, sort of feeling a little bit like Groundhog Day, one day to the next. How the market's been reacting through this time?
Yeah, hello, Sam. It's funny that you mentioned that it feels like we've been in Groundhog Day because, in fact, the markets have been a little bit in Groundhog Day as well over most of the quarter. If you look at the chart I'm putting up now, you can see that volatility has been close to record lows for most of the quarter. And in fact, both equities and bonds just steadily kept rising throughout the quarter. It was all very quiet until suddenly it wasn't. And really in the last 2 weeks, there's been kind of a flood of information into the markets, which has caused that volatility spike that you can see there. And of course, it's caused a little bit of the downturn at the end of the quarter. In the Australian market, the biggest influences that are causing that downturn have got to do with the drop in the iron ore price. And I'm sure the audience have heard of the China Evergrande Group. They're a large property developer in mainland China, and they are teetering close to default, which could have ramifications for markets not only in Australia but in fact around the world.
Steve, let's explore that a little bit more. What has been going on there in the markets?
Yeah, look, let's have a look at the iron ore price, and you can see in this chart how the iron ore price has come off, and at the same time you can see on the same chart China Evergrande, how that collapsed. Now, this is due to the Chinese government putting a stop to property development, or at least curtailing property development. And that's had a big effect on China Evergrande, as I mentioned, largest property developer in China. They're also one of the biggest users of Australia's iron ore throughout China. In fact, one of the biggest customers, if you like, for all of Australia's iron ore. So those two things are related, and that's really what's caused the market effect in Australia. Globally, energy prices, that's oil, gas and coal, they're actually going really high, and that's because there's a bit of an energy crisis going on in Europe and the UK at the moment. They're even thinking of putting in petrol rationing in the UK shortly. So while iron ore prices in the materials sector are down for the quarter, energy prices and commodities overall are getting close to record highs.
Steve, let's look a little bit broader. How have the markets globally been going for the last 3 months and the last 12 months?
Yeah, okay, Sam. I think it's probably good to put this in perspective and look at the sort of the 12-month period first, because I've sort of started this talking about, iron ore's down and China Evergrande is close to default, and it looks like it's all bad news. The fact is, most markets, you can see in the chart here, the Australian market and the international market, and in fact our REIT markets, they're up by 30% for the year, for the 12-month period. So it's actually been a great 12-month period. Australian market, it's up a modest 1.7%. That's not bad given, in the context of 30% overall. The international markets, not as affected as much by iron ore as you'd expect. So they're up by 4% for the quarter. The worst performing market in this chart for the quarter are the emerging markets. They're down by 4.5%. Now, to have a look at the reason for that, Sam, it's related to sort of our theme about China putting stops on property development. China are also trying to reduce carbon emissions, believe it or not. And the reason for that is they're hosting the Olympics next year, and they're trying to reduce pollution. So if I now show you the next chart, it shows you over the last 12 months how Australia's gone, China, Europe, and the US. And you can see over the 12-month period, all in Aussie dollars, Australia, Europe and the US have all returned about 30%. If you look at China, it's down by 8% for the year. And in fact, Sam, no surprise, it's down by 15% for the quarter. And I think, Sam, this is a great example about why we have diversified portfolios.
Yeah.
Because even though, you know, a market like China is down, which is pulling the overall emerging markets down, other markets are actually doing extremely well. So it speaks to the power of diversification.
Yeah, look, thanks, Steve. And diversification is key to the investment philosophy that we adopt here at Insight Private Wealth. We do want clients to be invested in low-cost, highly diversified portfolios that ultimately are going to achieve their investment goals. Insight Private Wealth is not owned or controlled by banks or superannuation funds or anyone like that. And so ultimately, the way that we do construct portfolios for clients is about being professional and independent, ensuring that the client's objectives are always going to be met. So look, if you do require any sort of investment, financial or retirement planning advice, please don't hesitate to call us. We'd be glad to help.